Okay, welcome back VIP for another live trade case study on gold. Now the market's obviously in a very large consolidation, so we have to kind of identify some scalps, right, during the day at the right time. And you've got to just wait for when there is some very clear direction, even if it's just on an interim basis. Okay, so I want to talk a little bit about how we can determine directional bias just on any time frame. Okay, so you've got to understand and realize that the market only really does two things. It either seeks inefficiencies, okay, to balance the market, which are fair value gaps, or the market is moving to seek liquidity. Okay, now here we can see from yesterday's trading, we've had this pretty significant inefficiency in the form of these two fair value gaps. Okay, I'll just treat them as one, and the market has come up to rebalance that inefficiency. Okay, so the market's come up not just into the bearish order block, but also into the fair value gap. Okay, and we've had a reaction from there. Right, so we've started to move down. Now, second thing that I can notice here are these two up candles are coming into this up candle, okay, which is a bearish order block, and we've also had a reaction to the downside. So, in my view, there's really no need for the market right now to come back up here. Okay, it's come up to rebalance that inefficiency. Okay, it's shown a reaction as well as a reaction from the bearish order block, and so therefore, in my view, the next logical direction for the market is to trade lower to seek liquidity. There's no inefficiency left up here, okay, and we also have now another bearish order block from where we can see reaction from. Okay, so in my view, the next logical direction, as I said, is to the downside, and I believe the market is headed lower to seek liquidity, resting below the previous daily low, okay, which is right there, and liquidity that also rests here. So there's other lows here. You can just look at that on your charts, look at the 4 hourlies. Okay, so that's how I determine direction when it's clear. And you can see the time, okay, New York ICT London kill zone has now opened, 1 a.m. Okay, this also looks like market maker sell model, where you have the original consolidation, okay, and we can see we have all this accumulation, right, some kind of a smart money reversal from high time frame PDRA, and now we should see distribution as I've marked with this down arrow. Okay, so in this market, you've just got to be nimble, right? You've got to identify your opportunities by looking at what the market's done, okay? What's the market's done on the left, and identifying what is the market's next move, right? And the best way to do that is to look for inefficiencies and how the market is reacting from those inefficiencies, okay? Because the market is only going in a direction to either sort out the inefficiency left from a move of the past or to seek liquidity. So if it's already balanced the level of inefficiency and we can see good reaction from there and other ICT signatures like the bearish order blocks from where the market's reacting, then you can kind of identify where the market might be heading next. Okay, hope the video is useful. I will now talk with you in a future video.